Traders love to argue until they're blown in the face between what's more important, between trading psychology and technical analysis. Now, you can be born with the most amazing natural trading mindset, bulletproof confidence, the most disciplined trader in the world. If you are, happy days, congratulations to you. I wish that was me when I started. But if you don't have that proven, profitable strategy in your hands, you are not going to make any money, right? Because you can have all the psychology, but if you don't have a profitable trading system, regardless of your psychology, you cannot be profitable. So therefore, at the start of your journey, it's a lot more important to focus on the technicals to develop that strategy and to prove that you have that strategy edge. And then further along in your journey, when you realize you're starting to scale up, trading large prop firm capital, investor capital, funded accounts, your personal equity accounts, that it's actually 80 to 90% psychology, which will be the difference whether you will be profitable at that point or not. Here are some interesting statistics from regulated retail brokers from the UK and also all over the world. And these particular companies, you will see them on TradingView, are the 4 largest regulated retail brokers. Did a recent study of their winning and losing traders. And according to the study, on average, 70% of their traders are losing. On FXCM, 62%. Oanda, 77%. IC Markets, 71%. Pepperstone, 75.3%. So what if you thought this? Why don't we just find out what they're doing and do the opposite? And we could be in that top 30%, right? Let's dive into that. And what is considered normal trading. Now, in 2015, FXCM did a study. Over 25,000 of their traders and a total of 43 million trades taken. 62% of those trades were winning trades. The average return of those trades were 48 pips, and the average loss of those trades were 82 pips. So we can quickly see here that their losing trades were almost 70 times bigger than their winning trades. And over the long-term period of the study, because their average losses are far more, nearly 70% more than their losing trades, they end up in a net result loss over a period of 100 trades. Regardless of the fact that they've won more trades, because their losses are far more, they've lost money over the net result of 100 trades. This is what we call the negative profit expectancy in the long run. To solve this is not a strategy or a technical problem. There are probably hundreds, thousands, if not hundreds of thousands of profitable strategies out there that you can trade with the market any way that you want. Think of all the thousands of strategies on YouTube that some are probably really good and really successful. So what is causing this problem if there's so much valuable information and different ways that you can trade out there? And this is because the result of this FXCM study is more of a human problem, not a trading problem. And I'll show you to you here. Here's an example. So let's say for the sake of this example, we've entered a long position on this particular asset, anticipating price to go long. Okay, maybe we're buying off a specific supply demand zone, support level, whatever your criteria is for this trade. And I'm pretty sure you've had this because I have, where you enter price. Okay, price is running long. We're going in our direction. We're very close to TP. And out of nowhere, what do we decide? We're going to set break even, protect our risk. Not within our rules, but we're going to set break even because we see that we're so close to TP, we're just about to hit it. We must hit it. And then what happens is price pulls back, you get stopped out at break even, and price then runs your way to take profit. Now, this is one of many mistakes that traders are making that negatively impacts their long-term profitable edge. Is not the fact of setting stop loss to break even, but the fact that you're not following your rules here, and the fact that you're not following your discipline. If your rule is to set stop loss at break even, you need to do that when price reaches your break even point every single time and follow that rule. And that is one example of a classic trading error. Here are some more. So every single error that we have is due to an action, whether that's taking profits too early, pulling out of a winning trade too early, pulling out of a trade in drawdown because we're afraid we're going to hit stop loss, all of those actions have reasons behind them. And in order to solve this, we need to identify those reasons. So here are some examples. Trailing stop loss to break even too early. Pretty sure we've all done that at some point. But let's identify the reason. Why? Because I am scared of taking a loss. What is the subconscious emotional reason behind that? To avoid the pain of losing money. Taking low probability or an invalid trade. Forcing out trades, or trying to revenge trade to make back a loss. Why? Because I am scared of missing out. What I labeled here, the good old FOMO, fear of missing out. Why? Subconsciously, to avoid the pain of losing money. Another one, not executing a trade after a win because maybe we're happy with the profits for that particular month. We don't want to potentially lose those profits. Why? Because I don't want to give back any profit. The subconscious reason, to avoid the pain of giving away money. Another one, taking profits too early. I want to keep what I have. Maybe we are now up in the blues, $1,000 up or $2,000 up. We're seeing that big blue flashing green monetary gain that we're up. We don't follow our rules. We want to close that trade and keep what we have. Another classical trading error. Reason, I want to keep what I have. The subconscious reason, avoiding the pain of losing that perceived money gain. Increasing your position size after a loss. This was something I struggled with for a while. Perhaps you're in a prop firm challenge and you're trying to pass phase 2 to get funded. And what happens is, our first trade, we take a loss. Now we're 2% down. So what we need to do is, and what we want to do is, we cannot end that day with a loss. We have to get back to break even. So what do? We now risk over leverage 2 or 3% instead of our rules that only allows 1%, just to try and get break even for that day. That trade loses, and now we blow the account. Another classical trading error. Why? Because I want to get back where I was. Back to break even for the day. I don't want to end off the day on a loss. Subconscious reason, to avoid pain. Now, the problem is with this, you only realize that you've made this mistake after you've actually made it. And I'm sure we've all made these mistakes, and we will perhaps make them in the future. But once you're out of that trade and you've maybe pulled out too early, or you've pulled out while you were in drawdown and that trade then ran your way, you only then realize the mistake by not following your rules, and you look back and you realize it. And those thoughts race through your mind, like, what is wrong with me? Why am I an idiot? Why do I keep doing these mistakes? Why did I pull out so early? Why am I stuck in this cycle of mistakes that is stopping me from getting where I need to be? So let's dive into how you can correct this. Firstly, I want you to chill. It's normal. This is how humans are designed, because it's not your fault. And that's the first thing we need to do, is realize that this is not your fault and there's nothing wrong with you as a person or as a trader. But in order to dive into this, we need to dive into a little bit of biology to understand how the human mind works and how we can work with this and train our minds to realize that this is not our fault and to avoid these mistakes. So over here, I've got a bit of a graph with these little black dots. One dot represents 100 years. This is 200,000 years ago, when the modern human brain was formed. Today, in the last 500 years, we are walking around with the same brains in our heads that was formed 200,000 years ago, right? Through evolution. We are literally and legit walking around with the same hardware as our Paleolithic ancestors. And back then, it's what we called an immediate return environment, where you had to have that fight or flight response because it was extremely important for survival, right? You got to go out for lunch today. We got to go hunt our lunch. We're either going to come back and eat, or we're going to die. So we had to value that immediate return environment, what we call that fight or flight response. Whereas in the last 500 years, today, well, from plus minus the 16th century, we have had crazy technological advancements that has now led us to living in a delayed return environment. So our brains are designed to value those immediate returns, to respond to those fight or flight responses, rather than making decisions that are important to long-term success. So what does this ancestral study have to do with trading? Well, primitive survival instincts take over our decision making in critical moments. So when you're in the markets, you've probably experienced this, and so have I. When you're on a demo account, you probably have this profitable strategy, it's easy to make money, you're doubling accounts, you're getting really good return, and you're seeing that demo number go up, and you think to yourself, if I can do this on demo, why can't I do it on a live? And I've had this before in members in MM Funded. They actually leave their job to pursue trading full time because they've now had this crazy success on a demo account. But as soon as there's risk on the table, now they're trading live capital or investor capital or these funded accounts. It becomes way harder and they start to fail and lose money. And your brain almost melts, right? Like you cannot remember what you did on that demo account. And this is because those primitive survival instincts are taking over that decision making and critical moments in that process. Okay, so other words, when you are stressed, it's hard to make the right decision when you have risk on the table, because we're using our primitive brains and instincts to fight these Japanese candles that we're seeing on our charts, right? Instead of rather than fighting to stay in between targets, making it extremely hard to do. So like I mentioned earlier, back then, 200,000 years ago, when you go out to get your lunch, it could literally kill you. That evolution has made you wired to want to win and survive at all costs. You're getting with me here? So because you had to believe you were going to win, you had to overcome that challenge and win that hunt. Or either that saber-toothed tiger or that mammoth is going to trample you to death. So you had to go and hunt, and either you weren't going to hunt and die from hunger, or you'd end up getting killed by that animal anyway if you go in with the wrong mindset. So that evolution has followed through to today. For example, to be competitive, to want to win, to do well in business, to do well in trading, to do well in school, to do well in sports. But bringing in that mindset into trading is a recipe for disaster, i.e., wanting to win all of your trades at all costs, avoid that pain of losing money, is going to lead to the not so optimal trading decisions of allowing our edge to play out over time. So to explain this in a more simple term, your brain's short-term survival orientation will compromise your need to take a long-term perspective in order for your edge to work in the heat of the moment. This is a very cool quote by Randy Howell, a trading psychologist, where we are literally biologically wired to see any risk or uncertainty as a threat to our life, that it could literally kill us. Because of that evolution, that is how we have now been wired. So to explain this in a more simple term, so what this means is you're going to have losing and winning trades in the short term. Okay, it's just the natural cost of doing trading and doing business. But in the long run, we know our edge will play out. But when you're experiencing that losing trade in the moment, that's when your brain goes into meltdown and we end up making those mistakes that we went through on slide 7 with those typical trader mistakes. Entering trades on low probability setups for the sake of forcing our trades, pulling out of profitable trades early, setting stop loss at break even when it's not within our rules, etc. Because we think in that moment about the long term. Because we can't think about the long term in that critical moment. Because our brains struggle with that. Why? Like I just said, it's a biological reason. As we've discussed, our brains are caveman brains that view all sorts of uncertainties and risk as a direct biological threat to your life. Your brain thinks that it can kill you, so it goes into a mode where it wants to protect you. So when we're tackling those Japanese candlesticks, when they, moving around up and down, and you feel some sort of uncertainty due to natural market conditions and the probabilistic nature of price, the potential that we can lose some money, your brain sees that as a biological threat to your life, and it thinks it can kill you. And that's when your fight or flight responses kick in and you end up making those mistakes. Okay, so I want to give you an example of flight or fight responses kicking in. So let's say we've entered a long position on this particular demand zone. Okay, we're looking to take price to our target or whatever, but now price goes against us. We're halfway to stop loss and we see that we're now in the red. Okay, our phone or our MetaTrader or our trade platform is flashing at us minus $1,000 in a bright red color, minus $2,000, and we start to think. And this is where your emotional brain starts to hijack your thinking brain. which is what leads to mistakes. So remember what we just spoke about? Biologically, your brain sees this as a threat to your life, a threat to your financial health, a threat to your trading goals, a direct threat to potentially getting funded, a direct threat to quitting your jobs, a direct threat to perhaps your ego. Because maybe, you shared this trade with your community, or you posted it on your Instagram story saying how you're going to kill the markets this morning and smash the day and make quite a nice bit of profits. All those thoughts are now swirling in your head, and your head sees danger, danger. So now let's say we're halfway to stop loss. You're going to think to yourself, okay, it's fine. I'm only 0.5% down. Let me just get out at this point because I don't want to take the full loss. Then I can protect some of my capital. Okay, we break our rules and we close this trade at a half loss. What happens is, you close the trade for half a RR loss, boom, price goes into your direction in your favor if you had just stuck to your rules. And then, like I mentioned earlier, you only realize it. You look back and you realize, what did I do? Why did I do that? Why did I break my rules? And this happens because your animal brain hijacked your thinking brain to protect yourself at all costs of experiencing any pain. So when your emotions are going up like that, all right, we're increasing our emotions in that particular critical moment, our decision-making mindset and mind ends up going down. And that's where we end up making decisions that don't appear to be based on any logic or reason. And that's because our emotional caveman brain is taking control, which is what leads to us making those mistakes because of that subconscious of wanting to avoid pain. So if we think about this, from a young age, we are taught that only winning and being right is rewarded. Okay, whether you won that trophy in sports, you got that academic medal, you got that honors blazer at school, getting your good grades, getting top A+ grades to get into Harvard or those top universities. In class, we're given a merit or a sweetie if we do well, or whatever it may be, from a young age. But bringing in this only winning mental model, which, yes, I agree, serves us well in most areas of life, because that's what we're taught from a young age. It does serve us well. We want to achieve. It's a good thing to want to win and be right. But the problem is, bringing that mental model into trading is terrible. It's the worst environment to bring it in. It's just not a normal environment. So we need to be completely comfortable, unlike we taught from babies, with the idea of losing, with having that uncertainty and risk on the table and dealing with that probabilistic environment of trading. So how we think what trading is versus what trading is in reality. Okay, so what we think trading is, we win, we be right with our trade, and we make money. Because in order to make money, we need to win that trade and be right. Am I not? What if I told you this was wrong? What trading really is? A successful trading mindset requires you to not care about winning. It requires you to not care about being right. All that matters is that you make money in the long run. And the easiest way to see this perspective and to understand how trading really is, treat it like a business. So we know that conventional businesses, traditional businesses, have running costs: rent, electricity, stock, equipment, supply, staff wages. And then, you're right, you got to go and make sales on your products and make more sales on the costs, making your overall difference in a net profit. That's how businesses make money, right? So everyone gets that in a business term, and it's considered normal and fine. But when it comes to trading, people are trying to avoid those losses. But actually, if you view it in that same way as a conventional business, it's simply the cost of doing business. Those businesses cannot be profitable without spending those expenses on their stock, their supply, their wages. Their profits cannot exist without that. So that is why losses in trading is just simply that cost of doing business. Like I mentioned here, taking a loss is a cost of allowing your edge to play out over the long run. So eventually that you have a net profit over time. Which is a very simple concept to understand. But here is the problem. We are, us as humans, we are emotional beings. We rationalize, meaning that we are not logical beings. We are emotional beings who then try to rationalize our emotions with logic. So this all boils down to the problem of the brain and on uncertainty and that risk, that biological threat. So as we've discussed now, our ancestral animal brains that we have evolved with wants us to control the outcome, to be right and to predict the future, right? To control that trade, to be right. We want it to be right and for it to be a win, right? But in order for that, we need to predict that future and we want to be right about that. This is the problem. None of those three things are controllable, but we are hardwired to think that they are, and that is what causes and makes trading so hard in the long run. So this is where I want to dive into further depth into this, where you can get a bit of understanding and how you can start to retraining your brain and your psychology. So the science behind the animal brain evolution, we're going to dive into a bit of biology here. Firstly is the amygdala. This is our lower-minded animal brain, the ancestral brain that we've been talking about this entire time. Its objectives are consistently and constantly wanting to seek pleasure and avoid pain at all costs. This is where our emotional sensor of the brain is, which is rooted to think about survival, to protect us at all costs when we see those biological threats, which is our primal instinct. Secondly is the neocortex. So this is the section of the brain which is our higher-minded animal, which is responsible for our self-governance, strategic thought and execution. Rather than thinking about immediate survival, this is thinking about more long-term thrival and your more advanced thinking of the part of the brain. Okay, so how does this relate to trading? Well, when you are stressed, thinking about passing that funding challenge, you want to get that funding payout, or you want to be profitable and get your profits up on your live account to potentially leave your job, live capital, investor capital, whatever it is. All of that perceived thought process when you're busy trading those accounts, when you're seeing those candlesticks, when you're setting up your trade plans, all of that information that your eyes and brain is reading is first processed by the amygdala. And that's where your emotional brain is kicking in with that fight or flight response. And it can hijack and block that information going into your neocortex, where your thinking strategic brain is. So the amygdala makes decisions literally in nanoseconds. It leaves you making those impulsive decisions before you've even had a chance to think. That's where you think to yourself, why did I even do that? Why am I such an idiot? And you don't think it through properly, because that's your amygdala literally making your emotional decisions in nanoseconds before no time to think about it through. So our job as a trader is to regulate those emotions that happen and go to the amygdala and allow that info to then come up into the neocortex so that we can make that correct logical decisions that we know is vital for long-term profitable trading. Okay, so that's psychological discomfort of risk, like we've discussed. We think that is that biological fear, that threat to life, because remember, our brains are amygdala and cannot see the difference between what is a true biological danger or fear to your life and what is literally just a little psychological discomfort of having a bit of risk on the table. Because that little bit of risk on the table, our amygdala sees as a direct biological fear and threat to our life, but can't tell the difference. So to the untrained brain, any risk produces a biological threat and fear in our body. That feeling where we're watching a trade, we're in drawdown and we're literally leaning over our tray hoping this trade goes our way. That's that amygdala side of your brain, seeing that as a threat to your body because it cannot tell the difference. So I'm sure, as I've actually just mentioned now, we've all experienced this. I cannot tell you, I have, and we've all been through it. When you're sitting, watching that trade going against you, you're all forward in your chair, you sweating off your head, you feel tight, your heart rate is pumping, and whatever it is, that is what's going on there. Your brain cannot tell the difference between that giant stomping mammoth or that saber-toothed killing tiger coming at you and just potentially about to lose some money or a funding challenge or whatever it is. That's why we feel the way we do when we trade. So now we know why we are wired to fail. Because the brain you brought to trading, that nature has given you, cannot give you the success that you seek. You are literally asking the brain to do something that is its worst nightmare. Deal with the risk, that biological threat to your life. And be okay with it and still accept it. So in other words, what nature has given you is not what the artificial world of the market needs. So it will have to be retrained and rewired for the task to work in a probabilistic and uncertain environment. So how do we evolve to the light? Where can we allow our thinking brain to be controlled? There's two main fixes for this. The short-term fix, where we build, develop and acquire a mechanical strategy, where you have a very tightly defined system where the rules are so crystal clear that you know what to do in every single scenario. So this is going to give you the biggest chance of sticking to your rules and let those emotions dictate your decision-making process. Secondly is the long-term fix, where we need to work on rewiring our brains. So there's a good old quote that goes, becoming the designer of our own minds and not letting our minds design us. So we don't become slaves or victims of those fight or flight fears and responses. So, like you've been watching in this bootcamp so far, I know the next stream this Thursday that I've got here is actually everything just covered in this bootcamp, where I've covered rule-based trading, a trading system that decides which trades to take regardless of the current market conditions and regardless of your amygdala and emotions. Because these are the one of two things that are going to play out. An event is going to print. There's going to be two criteria. Our rules are either going to decide yes or no. We do nothing, or yes, we execute. If our execution rules print, we execute or we do nothing. That's it. No impulsive amygdala decision-making process to now suddenly get into trade because we haven't traded for 2 days, or we're in a bit of drawdown, we need to get that account back up. We execute on these rules. Once you've now learned the mechanical strategy that I've taught you throughout this bootcamp, you can then start to form that mechanical trade plan. That mechanical trade plan based on those rules is going to allow you to prove your edge, to collect data, to collect those hardcore results that is then going to prove your edge. Once you have that data, it will then give you that bulletproof mindset going into price, that confidence that you need to execute consistently, which means we can now take consistent actions on the markets, which equals consistent results. Consistent results cannot exist without consistent actions. Those consistent results is going to allow us to remain sustainable, to get that consistent percentage return every single month, which then is going to allow us to scale big to those big 100, 200K, 1 million funding portfolio challenges. All of that is going to be much easier and way more higher probability to happen when you've proven your edge through all of these mechanical rules and you understand how your brain thinks and realize that it's not your fault. And that is exactly what I help my traders with at Funded. That solution one, that short-term fix, where I literally hand them my exact mechanical roadmaps and everything already in this bootcamp done for you for both my day and swing trading strategies to suit your particular lifestyle. I help you implement this into the markets. I hold your hand through the process and I help you collect data to build those consistent rules for you that you can consistently execute on to get you consistently profitable. To prove that quickly and to prove that your trade plan has that edge. To allow your brain to start seeing that, to also start processing information with your neocortex instead of your amygdala to make controlled, calm, and consistent decisions in the markets based on your rules, not based on what your amygdala is deciding for you, that caveman brain, where we bypass that information to that neocortex. Okay, so you can see a whole bunch of different case studies, exactly what's included inside of Funded, a whole bunch of my case studies, a lot of my funded members on my funded wall, full course curriculum, exactly what's inside, and exactly how you can get started. A lot of common questions that I get for Funded, I've listed on the website here that will hopefully answer you. And then the section over here where you can get started. So again, we do this for you, the full end-to-end zero to funded course with over 8 modules, 100 plus immersive video lessons, interactive chart exercises and walkthroughs through my live streams and my trading room, where I go through full top-down analysis, trade plan formulation for you and hold your hand and do it for you inside of the community. So not only am I just teaching here, I'm also walking the talk. I'm in the trenches with you, grinding, preaching what I talk here, and taking you through that process and leading you. Included with this as well, you will get the Funded service, access to my trading rooms, daily sessions, trade recap videos, daily analysis, markups on Euro USD, GBP USD, and XAU USD, weekly live Q&A coaching calls, and then also my one-on-one mentorship where I personally give you my WhatsApp number, and literally you can call me anytime. You can hop on Zoom with me anytime. We'll live trade together. We'll go through the particular areas that you're struggling with. I will get to know you as a trader on a personal level, know specifically what you're struggling with, and tailor make that mentorship for you, which will guaranteed get you results no matter how long it will take. I will be there for you. And then, of course, the trading floor where you're able to get access to my live trading rooms and my live streams. Everything is covered. Even if you have zero knowledge, you don't even know what a candlestick is, we cover for complete beginners from that first building block that we discussed in the first video of this bootcamp, and all the way to more advanced level and advanced mechanical strategies. And using these rules and mechanical processes, these are the hundreds of funded members that I've created over the course of 2023 and 2024. Multiple guys getting their first ever profit splits and being able to scale that on a consistent basis. If I had to scroll throughout this channel, finding all of these different certificates that my members have achieved, it would take me probably about close to an hour to scroll up to the top of this channel. So if you are interested in this, you can click the link down below this video, where I will help you with the solution, the short-term fix to your trading psychology, and hand you everything already done for you. So now, onto solution number 2. All trading strategies fit somewhere along this scale. Starting from 0%, which is completely discretionary, there's absolutely no rules, to the end, which is completely mechanical, almost like a robot where there's no room for discretion. It's like an EA that just executes on the same rules at every single time. There's no room for any human error or any human thought process or a human discretionary into the 100% point of the scale. So this is literally something that you had to have had coded into an algorithm. In my opinion, if you are a human and a manual trader, that sweet spot is anywhere from 70 to 80% mechanical, where you have a little bit of room and somewhat some sort of room for a bit of human discretion, because that is actually what is going to give you your edge. Because that is what's going to give you your edge over trading algorithms. Because that will allow you to take all of that information based on your intuition and experience with the many different variables that you've also learned throughout this bootcamp and choose whether to execute or not. Now, even if you had a strategy that is 100% mechanical and you have an algorithm that only executes on these rules with no human discretionary or discrepancy involved, so you're not even getting involved, this algorithm is executing for you based on its 100% coded rules. I've seen people have access to this and still, even then so, let their psychology get in the way. Alright, maybe that algorithm goes into a little bit of drawdown. Their brain can't handle it. Their amygdala cannot handle that. Flight or fight response comes in and they turn off the algo and they wait for that algorithm to start making those profitable trades again. And then they turn it back on. But if you know anything about trading and trading an edge, that is going to be the recipe for disaster, because you cannot predict where those winning and losing trades will be. So no matter what, we need to rewire our brain, because the brain that has been given to us that we are now bringing to trading cannot give you that success that you seek. You know, now rewiring your brain sounds a bit like an iffy concept. Like, how the fuck do you do that? Do you need to go for surgery and actually rewire every neuron in your brain? No. This is literally possible through neuroplasticity, which is the ability of the brain to recognize itself, both in structure and how it functions. So beyond the scope of this lesson, I'm not going to dive into the exact science behind this, but this is what Randy Howell talks about. The one credit or influence that I got for this lecture is that we need to be the designers of our own mind and not let our mind be the designers of us, and not be a victim to that caveman emotional brain. So learn to become the designer of the mind that engages uncertainty rather than historical self. So a little bit into the science, a way that we can do this is by doing new skills, doing routines, and creating new experiences, which will create new neural connections. So repetition and practice of those new experiences and skills strengthens those neural connections, and connections in the brains that aren't used become weak. So a silly example, one thing that I do to train my neocortex to make those controlled, risk calculated, and my advanced thinking side of my brain, that neocortex, to train that is, silly example, when somebody talks to me and somebody asks me a question, I will sit, I'll look at them, and I'll think for 2 or 3 seconds. I'll process what they said, and I will think about and process a proper answer. Even if it looks weird and you know they're asking you, just have a sip of your coffee, think about what they've said, and practice responding with your neocortex. Literally think to yourself, neocortex, okay, come, respond. And you can train it and respond properly instead of just, hey, how you doing? No, good. Fine today. And you're just responding off your amygdala through your emotions. Respond more with your neocortex, saying, today was rough. This morning I came to Seattle to get my usual coffee. They were out of stock of the particular butterscotch syrup that I wanted, so therefore I had to have a normal coffee. But it's fine, I'm appreciative of that, so we continue with our day. And therefore, my day didn't start off my usual routine, but we make it better anyway. And think about a thorough, proper, thought-through response and detailed response that trains that neocortex response. There's many different examples that you can train this, but I'm not going to go too much into depth. But over time, when you repeat and practice that neural connection to your neocortex, because you're not using your amygdala as much, your amygdala is going to get weaker. So by doing that, we can then move from the fantasy of controlling the outcome, trying to control that to be a winning trade, to rather controlling the mind that you bring to the management of uncertainty. So what does this mean? This means when you've entered that particular trade and it's going against you, you don't let your amygdala interfere. Don't let that emotional caveman side of your brain make the decisions for you. Sit calmly, process it with your neocortex, and realize this is a part of my rules. This is the cost of doing business. This is all allowing my long-term profitable edge to play out. I've executed this trade on my rules. It's 100% valid. Because I'm going to go a little bit off topic here. Even if over a long period of time, you follow your rules to the T, you're executing based on that neocortex, even then, so if you're not profitable, all you need to realize that, okay, it's not my fault. It's not that I'm a bad trader. It's not that I can never do this. It's that my rules just need adjustment. We need to tweak things. We need to change those rules to start getting that long-term profitable edge. And these are all things that you will learn in the MM-funded course, the testing phase of our mechanical rules. But remember, it's 100% normal to feel the emotion when you're in that drawdown and it's going against you. But you can teach yourself to not act upon that emotion. So here's an example. You might know that your strategy through testing, has a 60% win rate. So your brain thinks, and I even thought it now, that every 10 trades, we're going to have 6 wins and 4 losses. But remember, we have no idea what sequence these wins and losses are going to come in the form of, and in what order they are going to come, because we cannot control that outcome. And that absolutely mindfucks us. It's like so hard to deal with that because we want to know that outcome. It's how we wired. We need to know that outcome because we want to win. We want to control that. We don't want to experience those pains and losses. We don't want to have those 3 or 4 trading losses in a row. We want to have it predictable. Comes back to we want to control that outcome. So we need to learn to manage the emotions that give rise to the mind that engages uncertainty. Learn to approach with discipline, impartiality, and patience. Learn to choose one thought over another. Let go of the need to win, and the job becomes one of performance. That mental edge then drives the strategy edge. So remember, you're always going to feel these emotions, but you need to learn to choose that one thought over another and not let your mind choose for you, that Abnegala mind choose for you. That comes back to that quote, we become the designer of our mind. We choose the thought through our neocortex instead of letting our mind become the designers of us, which is the Abnegala part of that mind, making the decision for you. So that's where once we can learn to choose one thought over another, you're already a step ahead of processing information, perceived information, with your neocortex instead of your Abnegala. Let go of the need to win, okay? We need to let go of the idea of trying to win every single trade, because then our job becomes one of performance. You know, we need to control the things that we can control, how we do our analysis, how we formulate our trade plan through our rules. Do we execute upon this trade plan if our rules print? If it does, we execute and we manage with our rules. If it doesn't, we stay out. Those are things we can control and can decide, where we can choose one thought over another. You know, another one is, do you journal your trades? Do you have all of the things that you can control in place? Because that will then drive your strategy edge. And that's what successful trading is. It's a combination of those three things. Having a profitable strategy, having the correct risk management based on your rules, and having that psychological mindset edge based on everything that I've taught you in this trading psychology lesson. Because that mindset is going to allow you to stick to the rules of your strategy and your risk management. Okay, so a good analogy to think of a trader's mindset is like a surfer. So a surfer is trying to fight or control and trying to predict that wave so he can ride that wave flawlessly. The surfer lets whatever wave is produced, much like whatever we let price action do in the markets, and he learns to go with the flow. All right, he learns to deal with whatever wave comes at him, you know, whatever the wave presents or whatever move that wave wants to make. And, you know, he learns how to deal with that and go with the flow, regardless of the fact that he can control it or not. Bit of a simple analogy here, but it kind of made a lot of sense to me, because if you think about that, you know, that surfer cannot control that wave, but he tackles it and he goes with the flow, even though to the fact that he cannot control that wave. You know, not getting attached to biases, going with the flow of the markets, you know, going about it and thinking about that as order flow. But yeah, something that I connected with and understood in quite a nice analogy of looking at this in the view of a surfer's point of view. It's paramount to think the correct way, otherwise you will be robbed from your greatest opportunity. Now, this particular lecture was inspired by the works of Tom Hogarth, the Hermetic Principles, John D. Martini, Lewis Mocker, Randy Howell, and Photon Trading. So please, by all means, do feel free to go and search them up, dig deeper into some of these psychological concepts that I've included in today's lesson based on the inspiration of their work. So hopefully you're starting to understand a little bit more about the brain and really what we're dealing with here, why we make those mistakes that we often make in the markets, because the first step to solving this is identifying those mistakes, because that then allows you to take the responsibility and the accountability of your actions going forward. You now know what you need to do to start to work on that, to become the desire of your own mind, so that we can start to regulate those emotions and not let that amygdala, animal mind of us, to continuously take control and stopping us from making those long-term decisions that is vital for long-term success. So the short-term fix: get a profitable and mechanical strategy that will allow you to execute on rules and not on a impulsive and emotional basis. All right, prove your rules, collect data on it, and from there you can build on it. I really thoroughly enjoyed this lecture. In fact, this is actually one of my favorite topics in terms of trading, is the psychological side, and really diving deep into the biological aspects of our minds and how we think and how we can take advantage of that once we've identified those problems, and how we can start to train to rewire that mind. Of course, all of this coming from a lot of inspiration from the credits that I just had on screen now, kind of mixing all of their philosophies together in today's one simple lecture that I have also applied to my trading that makes sense to me. So I hope you guys really resonated with this nicely. With that being said, let me know in the comments, and I will see you guys in the next lesson.